Hey, Michael, good morning.
Morning.
How are you?
I'm well. How about yourself?
Good, thank you. Thanks for joining us this morning.
No problem.
So before I ask one specific question I have for you, Bill talked about primary residence and proving that somebody is still working in the workforce to call it their primary residence. Are there any differences when somebody's buying a second home versus a primary from an underwriting standpoint, or is it the same guidelines?
As far as qualifying the applicant from a credit perspective, there's really not any difference. Income is income, debt is debt. From the property itself, there is a little bit of a variance between Fannie and Freddie. So Fannie is a little bit more lenient in if you qualify for payment, you intend to occupy at some portion of the year, 99% of the time you'll be able to call that a second home. Freddie still has wording in there that the area that the property is located in should reasonably be considered a second home. So for on Freddie, we might have to, ask the question, why is this area, given where, up north Michigan, we're down that second home away. So.
Okay. All right. Thank you. Underwriting guidelines based on COVID have definitely changed. And I this is my opinion, and I'm sure others share this opinion, but I would think self-employed borrowers really have had it the toughest with COVID guideline changes.
Yes.
Can you tell us a little bit about what self-employed borrowers need to prepare for in getting a mortgage?
Correct. So COVID has impacted the self-employed borrower, which is kind of the quintessential variable income applicant. Or using income has been claimed traditionally the year prior to the application date. So what COVID has done with the self-employed borrower is taken the profit and loss statement from being optional to now required. So we have to see what's going on with that business year to date so that we can make a determination. So the two options that we have available are getting an audited profit and loss statement, which can carry a pretty hefty fee from your CPA to produce, or an unaudited profit and loss statement, along with the two most recent months of business bank statements. The lender can use those documents to assess what the year-to-date earnings potential are and see if our income is stable. If it's declined, we've reached a plateau, then we can qualify using that lower income. Or the worst case is the income has declined with no floor, making the income unstable.
Yeah, that's it's understandable but tough is probably the best way to say it. But we're still doing a lot of self-employed borrowers from a financing perspective.
Yes.
There's some businesses out there that are flourishing and doing quite well. And some have seen a tougher time. And those that have seen a little bit of a tougher time, most have applied for and long received the PPP grants. So we've seen some deposits, whether it's the grants or just general deposits. So can you touch on that and how that works when we're looking at bank statements, business bank statements?
Sure. So the government assistance or grants, we'll kind of exclude those deposits because we cannot use them as business assets. We'll look at the cash flow. So just because you receive the assistance doesn't mean that your business is not stable. A lot of these applicants are taking the money because the money is available. I'm like anybody else. If you're going to offer it and it's going to help my business, I'm going to take the assistance. So what we'll do is we'll look at the other deposits, the other, expenses that you have, sidestep the government assistance and see what does our cash flow look like year to date. And if it's stable, life is good, we can use the prior year's earnings. If it has declined a little bit, but again, we've proven that we've hit the floor and that income is, can help the loan qualifier, makes the loan qualify, then we can still make that loan work. Out of all the self-employed borrowers applicants that we've had, very few of them have declined so much that we haven't been able to use the cash flow that's been made available to us.
Okay. Well, great. Well, thank you very much, Michael. Really appreciate it.